You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we are not afraid to venture forth into the intersection of the derivatives markets and the world of crypto. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever exciting, at least we hope so around these parts, Options Insider Radio Network, reminding you, especially for a show like this where the audience is in many ways new to the network and indeed new to the world of options. Make sure you keep rating and reviewing this content wherever you get the show. It's available on pretty much every platform under the sun. It does help the new folks, and there have been a legion of them these days that are discovering the world of options and indeed the world of crypto. So keep helping your fellow listeners, keep rating and reviewing wherever you find this program. As we're closing in on episode 100, this seems like the newest addition to me of the network. This is the young upstart show on the network, yet it's already closing in on episode 100. So crazy how time flies in the world of crypto. Of course, keep sending in those questions and comments too. We do love to hear from all you guys and gals out there. And let's see who we're hearing from on the program today. It is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show we welcome on guests from throughout the world of crypto, derivatives, and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And today's guest is a newcomer to the Crypto Rundown program, even though he has been on the network in the past. He is Greg King, the CEO over there at Osprey Funds, as well as the founder and CEO of Rex Shares. Greg, welcome to the Crypto Rundown program.
Mark, great to be here.
Well, Greg, as my producers have notified me, they did a little bit of digging. You were last on all the way back on February 10th of 2017 on our Volatility Views program. A very different time, a very different world, a very different market, let alone a very different show. A lot has happened since February of 2017. Of course, we had a year later, we had the February of 2018, the big market meltdown, the VIX-mageddon. And then, of course, all things crypto winter started coming on hot and heavy. and everything else under the sun. And of course, the madness that was 2020 and now the equally mad year that so far that is 2021. So a lot has happened since your last appearance. And of course, you've had a huge influx of new participants and listeners on the network since then. Why don't we start there, Greg? Give our audience a little bit of an overview of your background in the financial space, what it is you guys do over there, Rec Shares, and then more importantly, your newest incarnation there, what you guys do over there at Osprey Funds, sir.
Sure. Yeah. So we've been involved in building exchange-traded products for investors for about 15 years, working at different firms, big firms, little firms. Rec Shares we started about 5 years ago, and you and I were probably talking about volatility-related products back then, I'm guessing.
That's pretty safe bet on the Volatility Views program, yes.
Yeah, exactly. So I created the first VIX ETP, VXX, when I worked at Barclays, and then co-founded Velocity Shares. We did a bunch of volatility-linked product. But the last couple of years have been focused on crypto. And we launched Osprey this Bitcoin fund that we have is 2 years old, but we just started trading under the ticker Obtc just a few weeks ago. Lots to talk about there. But my career has essentially been creating product that allows people to trade things that they want to trade based on a ticker symbol in their traditional, brokerage and IRA accounts, focused mainly on mainstream investors, but also, we have a lot of institutional interest as well. So that runs the gamut from volatility, commodity, and now crypto products. But what I've tended to avoid is the stocks and bonds, kind of plain vanilla 60-40 world. My start in this industry was derivatives based, so I'm always focused on stuff that's around the edges.
Well, we live in the edges here on the network, Greg. So that's where we like to hang our hats. Let's get into all things crypto, of course, because that's where you guys have been very active, as you mentioned of late. The holy grail, the thing a lot of people have been looking for in the Bitcoin and the crypto market for some time, is a way for your typical mom and pop equity account holder. Maybe they have an IRA out there, a way for them to play in this market as well without having to go to a Coinbase or a Kraken and open up an account there in an area that maybe they're not familiar with. And of course, having to buy an expensive underlying in a separate account and deal with wallets and all the other nonsense. It's a big hurdle still for the crypto market, and really when it comes to penetrating into the marketplace. And we saw how much of a hurdle that was for the futures market. Now take that to the next level with crypto, and that's where we find ourselves. So of course, a lot of people are trying to tilt at that windmill and bring some sort of Bitcoin exposure into not just securities accounts, but for the IRAs out there, which is where a lot of the trading activity is going up. And Greg, it seems like you have something aimed squarely at that market, sir. Why don't you tell us a little bit about the old Osprey Bitcoin Trust, sir?
The old new Osprey Bitcoin Trust. Yeah. Well, as you said, people have been looking at an ETF in this space. I think it was 2013 that the Winklevoss twins filed for an ETF. Right. And I'd been sort of building ETFs for 6 or 8 years at that point, and thought that was a little bit early, but that was the year I first kind of got acquainted with Bitcoin in the first place. Fast forward a few years in 2017, and there were a bunch of us that filed for a Bitcoin ETF, but it was pretty clear at that point that the SEC was not ready. In fact, they're still not ready as of today anyways. There is no Bitcoin ETF in the US. There's been a few in Europe. There was a couple in Canada just a few weeks back, but still nothing in the US. And so there has been for a long time really not much choice in the space. You had Grayscale that sort of pioneered this OTC traded trust structure for Bitcoin several years back. And we just took a look and thought, given our experience in building these products, that we thought we could add something to the space that brings value to investors. So we put out the Osprey Bitcoin Trust, and it's basically at a much lower price point. We partnered with Fidelity to custody the assets because that's a big deal in crypto, who's taking care of the actual Bitcoin. Like I say, it's 2 years old, but just started trading under the ticker symbol Obtc just a few weeks ago. So we're pretty excited about that, as well as a number of additional products that we have planned.
Well, let's get into the mechanics of that a little bit. Of course, you mentioned it is trading now on the ticker Obtc, listeners. You can check it out there for yourselves. You guys and Grayscale are kind of the only games in town when it comes to this particular portion of the market, and certainly for the aspect that is available in the IRA, which is attractive. But our audience likes to dive into the weeds, Greg, and I know you don't mind hanging out there as well, given some of your product history as well. So what are we talking about when it comes to OBTC in terms of holdings? Are you guys just holding spot Bitcoin? Are you using the futures? Are there options involved? What are some of the core holdings of OBTC?
So OBTC is very straightforward. It's just actual Bitcoin. I was going to say cash Bitcoin, but that doesn't make a lot of sense. So it's physical Bitcoin. That doesn't even make a lot of sense either, right? It's a digital asset, but it is Bitcoin itself. And it's held by, as I say, our custodian Fidelity. So you may know that they made a big push to get involved in the crypto space several years back. And Fidelity Digital Assets is, it's a large division of Fidelity at this point. So we've selected them as our service provider to custody the Bitcoin. It's physically held in their cold storage units. They've got a pretty robust system, and being an 75, 80-year-old company, one of the largest in the U.S., we feel very safe about that. But this fund is super straightforward, just holds physical Bitcoin, no futures, no options, just physical.
And you guys chose to link it to the Coin Metrics Bletchley Index, aka CMBI. Why did you guys decide to go that route, Greg?
Yeah, we chose Coin Metrics because we feel like they're a very serious firm building out indexing, and not just for Bitcoin. To index one coin is not that difficult, but we just think that they've got a great pedigree, and what they're doing over there is institutional class. So when you're choosing your benchmark, you want to make sure it's something that's going to withstand whatever turbulence is thrown at it, right? And we all know the Bitcoin market has a lot of that. Coin Metrics is also widely available. You've probably seen it on CNBC. They sponsor the ticker there. So our investors can kind of get a sense for how the NAV of their fund is doing in real time, right? By watching that ticker. That was important to us. So we went through each service provider and tried to select what we think are best in class. And then we also priced the fund at more of an ETF type fee level rather than sort of the hedge fund like fees that I think the space was used to and had early on.
The fees, especially in that late 2017, early 2018 period, were getting out of hand. I heard a lot of people talking about, your traditional hedge funds can't even get 2 and 20 anymore. They were talking about crypto funds getting 3 and 30 with like a 3-year lockup. Things were getting absurd. And of course, even getting to the world of Grayscale, they charge a pretty hefty 2% a year for access to their Bitcoin trust. Seems like you guys are going for a little bit more of a discount play here, Greg.
Yeah, we're at 49 basis points, the management fee. That's pretty middle of the fairway for an ETF-like product. There are some additional costs there for custody. We don't expect those to be more than 30 basis points. I've been asked that question a number of times for this year. So probably all in 79 basis points or less. And we structured it that way because custody fees are coming down. I've seen these custody fees were probably 100 basis points 3 years ago, and now in the sort of 25, 30 range. So we expect that to continue to drop. And with our fund, that goes straight through to investors. We don't benefit from that. It gets passed straight through to investors. So we wanted to separate those two items in how we structured the fees. But yeah, we think that's a very fair fee. And clients that are interacting with us are thrilled, obviously, about saving that much money. There's no certainty besides, death and taxes and reducing fees.
Well, reducing fees is certainly a good thing. One of the other issues people encountered, particularly early on with the Grayscale trust, was people got exuberant, as they tend to do in anything crypto. They started bidding that up. At one point, it got up to well over 100% premium of the NAV in terms of where that thing was trading. Now, you guys launched the Osprey Trust back on February 12th. You came out at $50. That was your launch price there on February 12th. We saw it run up pretty well to about 56, almost 57, not quite there, a few sessions later. And then, of course, by the 19th, it had been cut by more than in half, down to about 24 and a half. By the 24th of February, it was trading right around $43 again, so almost back to where it launched. That was at a time when Bitcoin was at about 49,000, and then it dropped back down to around $23. Bitcoin back up around 51,000. So obviously, there has been some exuberance in the early days there, Greg, where people coming in and bidding up a pretty demonstrable premium to the NAV out there. What are you guys doing over there at Osprey to try to get that premium a little bit in line and help improve the price action a little bit so it tracks a little bit closer to Bitcoin?
Yeah, so as of right now, it's about a 30% premium in the secondary market. And this is kind of one of those things about the market that we're operating in here in the US. Because the regulators have not allowed an ETF to move forward, you actually can't put in place features into the product that would help, right? So the main one being a redemption feature. And I won't get into all the technicalities of why, but these funds don't have a redemption feature built into the product, and therefore market makers can't arbitrage to create a fair value in the secondary market. So what you have is a pure supply-demand function. And so when a product launches, it does tend to trade at a premium. And then over time, that premium fades. And so you can have a kind of a cross current of, let's say, the underlying Bitcoin in this case is moving up. Premium is fading faster than Bitcoin is moving up. And so you could have a situation where it's going down. That being said, you're right. We launched somewhere in $50, and we didn't decide that price, just the secondary market did. And the NAV was in the teens, but now it's come way back down to earth. So I think it's in a much better position in terms of that for secondary market activity with investors looking to take exposure to Bitcoin.
So was that the primary driver, that reduction of that premium, the primary driver for that sell-off? Because we saw at the period when Bitcoin was marching towards its high of around 57,000, that same period, your trust was getting cut pretty much in half. That's obviously not ideal for the early couple of weeks when everyone's excited, Greg. They want to see this thing marching to the new highs like Bitcoin, right?
Yeah, absolutely. That's right. So it's a function of, to take a step back, you have investors in the fund already, right? When a fund launches in this, I'm just going to genericize it, not necessarily talk about our fund, because we'll bring additional funds that are similar. But these dynamics are such that the initial shares from the trust can only be placed with accredited investors. So those investors, if an investor is accredited, they can actually reach out to us and create shares at NAV at any time. It's, our website allows people to actually do that electronically via DocuSign. Once those shares become unrestricted and can be traded in the secondary market, those shareholders are allowed to go ahead and do whatever they like. But at that point, it may be trading at a premium or a discount. We're seeing the Grayscale product traded at a discount lately. I think that's a function of supply and demand as well. They just have a ton of assets in that product, and perhaps some people looking to get out, but there's no redemption feature, as I mentioned. And so you're going to have this trade-off in the secondary market.
Well, you mentioned a lot about the regulatory environment. It's kind of hard to discuss a Bitcoin trust without talking about the, shall we say, fluid regulatory environment here in the U.S. We asked our audience about this last week, Greg. I'd be curious to get your thoughts on this as well. We had a poll saying effectively Bitcoin exploded onto the radar in a big way in 2021. Many people, though, still think we need an ETF in the U.S. before this product can break into the mainstream. So we asked them a very simple question. Will a Bitcoin ETF launch in the U.S. in 2021? And our audience, maybe a little bit more optimistic than you're sounding right now, Greg. They were 59.6% in the yes category that there will be a U.S. Bitcoin ETF launch. Not just approved, but launched. We said launched in 2021. No was 18.2%. We had to throw in a little curveball there. That was, I just want Bitcoin options. And for our audience, that's a big one. That was up to 22.2%. Just want Bitcoin options. They don't care how they can get them. They want Bitcoin options really approved and tradable, maybe outside of the meaty beast that we're seeing trading over there at CME right now. Obviously, Greg, this hits home for you as well. The ETF scene a little bit fluid. It sounds like, Greg, you're a little bit less optimistic than our audience. We're going to see an ETF this year. Is that the case?
So your audience was 59% yes. I sort of give it a 50-50. I mean, I think that if you kind of do the math on when Gary Gensler gets in there and how long it takes him to kind of, figure things out, I do think that he's a very pro, or I should say he's very constructive towards cryptocurrency, right? Taught a class at MIT. And certainly the press loves to kind of run the old Bitcoin ETF thing up the flagpole every once in a while. It's good for a few stories, and a regime change at the SEC is great fodder for that. But I don't think that some of the issues that they put out in 2017 have just magically disappeared. You know, they put out a letter to the industry citing something like 35, 37 different concerns. And not all of those, you know, some have been taken care of by growth in the capital markets infrastructure around Bitcoin, but a couple of key ones really haven't. And so it remains to be seen whether they're just going to have to decide to get comfortable there or keep waiting. So I give it 50-50 this year. I do think within the next 3 years, I'd be more like 80-20. But yeah, I don't think it's going to happen. If it happens, it'll be right at the very end of the year.
I think maybe our audience caught up by some of the approvals they're seeing maybe over there in Canada and elsewhere, that they're starting to see some of the cracks in the dam up there. But so far, at least, you're right, not so much here in the U.S. Well, Greg, I'm always excited to get an early look at new products out there in the Bitcoin space, and I'm sure our audience will be very interested in what's going on over there at the Osprey Trust going forward. But before we go, Greg, I'd like to leave our audience wanting a little bit more. So if you have any hints, any teases, maybe other things you guys are working on, or perhaps something that's lurking in store for the future of the Osprey Bitcoin Trust, now is the time, sir. The floor is yours.
Very good. Well, I would love to tell you all about our new products. I have to be a little careful about talking about products that don't exist quite yet. But we are looking to roll out several over the next 3 or 4 months. Stay tuned. If you want to subscribe to the newsletter, that's the best way to stay informed. And there are seed opportunities for people looking to invest in the initial round. So we're going to bring to market a few obvious things and a few maybe not so obvious things. Several that we believe will be the very first to market. So stay tuned. I'm going to have to leave them wanting a little bit, or my lawyers will have me. But I'd love to come back when we have a product actually live and talk about it.
I was just saying, it sounds like someone's setting up for a repeat appearance here, Greg, on the network. Well, we'll look forward to that. In the meantime, where can our listeners go if they want to learn more about all things Osprey, sir?
OspreyFunds.io.
There you go. OspreyFunds.io. You can also give them a follow on the old Twitter machine at Osprey Funds as well. Greg, thanks a lot for joining us today. Give us an early glimpse into all things Osprey Bitcoin Trust, and we'll pay keen attention to not just the trust here, but what else you guys have cooking down the road, sir.
Awesome. Great to be here. Thanks again.
All right. Now it's time to keep on rolling with our next segment. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show we break down all of the crazy action in the world of the leading digital asset out there, aka Bitcoin. Another good week for the Bitcoin bulls coming into showtime. We saw Bitcoin up not quite 3,000 points, but pretty darn close to it, about 2880 or so from our last show. We were at about a 48,000, almost 48,500 on our last show, and come in today's show at about a 51,300 and change. So a nice little run here after a period of topsy-turvy volatility and a little bit of interesting price action out there. Interesting stuff afoot. Let's break down all of the analytics. You guys love all this coming at you, courtesy of our friends over there at Genesis Volatility, aka GVol. Check them out for yourselves, GVol, GVOL.io. If you like a show like this, I guarantee you're going to like their analytics, including their 1 hour volatility, which we like to keep an eye on here on the show. For a product like Bitcoin, just looking at end of day or, you know, some sort of other metric for volatility, 30-day, 90-day, doesn't really tell you the whole story. You want really that intraday, hour by hour volatility, because the tail of Bitcoin can change on a dime, as we've all seen of late. On our last show, it was a pretty frothy 97%, back down from that triple digits level, but still fairly hefty, fairly frothy out there. Come into today's show a little bit less frothy. The milkshake has settled down a little bit in the froth department, down to about a 91.5% when we kicked off the show. So again, for most major tradable assets, a 91 vol would be enormous. But for Bitcoin, it's actually a little bit light out there. Also, 30-20 skew, looking at all the options in that option strip from the 30 delta down to the 20 delta and the call wing and the put wing. Last show was about a 5 even. It's coming a bit on today's show down to about a 1 0.8. In terms of the OI, the hourly open interest last show was about 177,000. It's ticked up a wee bit since then, up to about 184,000. Obviously, we see some of the weeklies coming and going. That's causing big fits and starts here with the chart. And of course, we saw Feb going off the board a little over a week ago. That took off a lot of OI with it, but still fascinating to watch the hourly open interest, not the least of which because you can't do this in traditional options. You can't go out and check the hourly open interest in Apple options or Tesla options or GameStop, whatever the hell else you're trading out there these days. You have to wait once a day. But in crypto, you can, which makes it a little bit more fun out there. Let's go to the open interest. The crypto market likes to quote things in notional, so we'll indulge them here. The overall notional value of the open interest on our last show, just a tick under 10 billion. Coming into today's show, it's a tick north of 11 billion. So seeing a little bit more OI swirling into the space. Still the big dog is Deribit with about almost 9.5 billion worth of notional on their platform. Then you got bit.com, easy for me to say, number 2 at about 540 million. OKEX number 3, 236 million. Ledger X, actually, I take that back. CME has fought back into 4th place now. CME is there at 311, just eking out Ledger X, which has about 285 million for number 5. Huobi, number 6 with 12 million. We'll come back to Huobi in a little bit, though. And then Bakkt once again with the goose egg out there. In terms of OI, how it's stacking up calls versus puts, if you're listening to this show for a while, Bitcoin options traders tend to lean towards the call side of the fence these days. Maybe given where the lofty valuations that we are right now, the puts are putting up a good fight. The calls were at 99,000 contracts coming into showtime, and the puts were at about 87,000 contracts. So not quite one-to-one calls to puts, but pretty darn close out there. In terms of volume over the past week, over there on the big dog, Deribit, a pretty decent week of volume, in the post-Musk era. Bitcoin's been a little bit of a different beast, and we've seen some activity commensurate to that over the past week. We had 3 days of close to $1 billion worth of notional changing hands on Deribit. That's a pretty active day. Today, not so much, about half that, about 416 million. But still, a pretty active week, all things considered out there. We didn't really hit the crazy highs that we hit not too long ago out there. Closing in on 2 billion worth of notional back on the 23rd of February. Not quite that, but we got a little bit more than half of that multiple times this week. So again, the frame of reference for what's an active day out there from a Bitcoin options perspective has certainly changed here in 2021. In terms of the OI, how it breaks down from an expiration perspective, let's look out there. March still leading the dance. It's about 85,000 of those contracts are in the March. March dwarfs everything else. March is up about 8,000 contracts from last show. So again, a nice surge for March. The next most active contract in terms of most sizable contract from open interest perspective is June with about not quite 30, looks like about 27,000 contracts open out there. So March is the big dog by an order of magnitude out here. Nothing else really comes close. Similar story out here when it comes to the strike action, where the interest is out there from a strike perspective. The number one size strike from an open interest perspective is still the 40,000 strike. We're still clinging to that 40,000 strike. It's about 15, almost 16,000 contracts open. That's up about almost 2,500 contracts since our last show. The 48,000 strike, number 2, with just a tick under 10,000 contracts, about 9.7 out there. That's up about 500 or 600, so not a ton, but it's good enough for number 2. Then number 3, we fall down the strike chain the other way to the 20,000 strike. That's got about 9, almost not a little bit north of 9, about 9.1 thousand contracts. That's pretty much unchanged volume-wise from last show. So the top strikes, top positions hasn't really changed much in Bitcoin options since our last show. Let's head on out to the CME Bitcoin front, see how things are trading out there. Another week where the futures did some paper, the options not so much. Today we had about 6, almost 7,000 contracts on the tape from a CME futures front. And last week, a light but decently active week. Monday was 8.3 thousand. Tuesday, about 7. Wednesday, about 8,000. Thursday was the big day, 13,500. Friday, almost 11,000. Like I said, today, about 6,000 on the tape. Options-wise, not so much. The biggest day was Friday with 115 contracts, which, again, is a pretty decent day for the CME options, but overall, a kind of a quiet week out there. And again, not the most active week for the futures either. Bakkt volume bot Similar story out there. As of a couple of sessions ago, they had traded 1,149 contracts. That was down 14% and well shy of their all-time high, which was almost 19,000 contracts on Bakkt. That was back, of course, on September 17th of last year. So Bakkt really hasn't really looked back from that levels and gotten anywhere close to that in a long time. Again, maybe this much rumored, much hyped IPO through this SPAC, maybe that will gin up some volume out there. By the way, not a lot of action out there in Bakkt land, but there is action in the altcoin universe. So let's get to it.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show we break down what's going on out there outside of the world of Bitcoin, except for right now when we start with the top 10 out here. Where's my buddy Bill? He's not on the show this week. He'll be happy, though, because Doge no longer in the top 10. Litecoin bumping it out of the number 10 spot with about almost 12.5 billion worth of market cap. Again, standard caveat applies. Take these overall market caps with a pretty huge dose of salt. There's a lot of skullduggery that goes into these numbers, but the rankings are where the more meaningful data lies. Number 9, Chainlink. Number 8, a newcomer to the top 10, Uniswap. That's got about, looking at about 17, a little bit north of 17 billion. By the way, Litecoin was almost 12.5 billion. Chainlink was at about 12.7 billion. And now we got Uniswap at about 17.2 billion. Number 7, XRP. Oh, how the mighty have fallen all the way down to number 7, even though it wasn't a terrible week for XRP. We'll get to that in a little bit. It's at about 21, almost 22 billion worth of market cap. Number 6, Polkadot coming in about 31.3 billion. Number 5, Cardano, 35.6 billion. Number 4, Binance Coin, 36.2 billion. Number 3, Tether, 36.5 billion. Numero dos, it's ETH at about 200 billion, almost exactly. So ETH getting up there again. And then the big dog, Bitcoin, not quite at the 1T level, but not that far from it, 948 billion out there from a market cap perspective. Let's go on out to the number 2 in the crypto and indeed the crypto derivative space. That is ETH. Another good week here on the ETH front. On our last show, at about a 1521. Coming in today's show is at about a 1776. An excellent year and also an excellent price level for ETH, up about 250 odd points. Puts those crossing levels we talked about on Kraken from a few weeks ago on the big sell-off of around 700. Puts that into even more stark relief out there. A bit of a rough time for those folks who got caught up in that. In terms of vol, let's see, the 1 hour vol, ETH's always been a little bit higher than Bitcoin. That continues to be the case. Our last show, ETH was at about a 120% hourly volatility. Right now, it's at about a 106. So still frothy, still juicy, but coming off a little bit, and also still a little bit higher than Bitcoin. 30-20 skew last show was 3.2. Now this show has ticked up quite a bit to about 8.7. In terms of volume, actually was a pretty decent volume week. The biggest day last week was Tuesday with about 240 million. That's a pretty active day for ETH, but also worth noting on that day, Huobi. I said we're going to come back to Huobi. Huobi actually did more notional volume in ETH than Deribit did, which is the first time I think that's ever happened. They did about 120 million worth of notional, while Deribit did 110. The rest of the week, not even close. So barring some sort of aberrant data print, I'll need to go dig in there for myself to see. It does seem like Huobi, something sizable went up on Huobi on Tuesday of last week with huge notional value because they pretty much trumped Deribit out there. It's been interesting to see what Huobi put up. Obviously, that's the crypto exchange founded in China, speaking very much to that Asian audience. They have since moved abroad, I know. By the way, I was looking into them before the show. It's always fun when you log on to Huobi with an IP address from the U.S. They're very nice, they say. It appears you are visiting from the United States. Unfortunately, Huobi Global is not able to provide services to U.S. residents. Sorry for having caused you such inconvenience. It's a very Asian degree of politeness. That's very nice of them because it caused me such inconvenience, but it is pretty funny. Such inconvenience. I like that. So feather in your cap there, Huobi. And another feather in your cap for that volume. We'll have to pay attention. Huobi starting to maybe fight its way onto the big boys list out there. Other active days we've seen out there, obviously this past week, not quite as active as we saw back in late February. Again, that February 23rd day was a big day across the crypto board. ETH that day did almost 400 million on Deribit alone, about 395 million. So not quite coming to those levels last week, but still pretty decent week, right around 240, almost 250 million last Tuesday. So a decently active day and indeed a week, all things considered. Coming down to the OI now, let's see what's open out there in ETH land. Calls are up and puts are up since our last show. Calls, about 814,000 calls open in ETH land right now. It's up about 31,000. And the puts took a big jump up this week. Puts are up to about 630,000. That's up 50,000 contracts from this time last week. Not quite as close percentage-wise as Bitcoin is puts versus calls right now, but obviously puts ticking up quite a bit as well. And again, it's hard to blame anyone. These levels are extremely high. So if you're putting on some puts right now, it is hard to fault you out there. In terms of the open interest, hourly open interest, our last show was about 1.3, almost 1.35 million. This show a little bit higher at about 1.41 million out there. And in terms of where the action is from an expiration perspective, it's still March. That's the big dog out there. It's got 538,000 contracts open in the monthly March expiration. That's not even counting the weeklies. That's just the monthly expiration cycle, listeners. That's up 104,000 contracts since our last show. So March is where the action is. Crypto does love a quarterly, and ETH embodies that trend quite a bit. We've got June number 2 here with not even half of the OI of March. And then behind that is December, actually, and then September, actually, that. So D's actually higher than September, but it's all pretty much quarterlies. Lighten up the tape here in ETH still. And in terms of where the strikes are, this has been kind of an ongoing puzzle for a while out here in terms of what's going on from an ETH OI perspective. It's still extremely deep, extremely meaty strikes. I think the only way really to read this is the hodlers are still hodling out there in ETH because the 400 strike is still number one with about 83,000 contracts open. That total hasn't really changed since last week. So whoever's open on the 400 strike, they're still holding on. The 320 strike, 67,000 contracts. That's also unched pretty much from last week. And the 480 strike, another very meaty strike, also tied for number 2 there with about 67,000 contracts. Both of those are pretty much unched. The only strike that really ticked up this week in the top 4 here is the 1600 strike that has about 61,500 contracts open. That's up actually about 6,000 contracts. So some opening paper there on the 1600 strike, which is not surprising. That's a very relevant strike. 400, 320, and 480. It's like folks are just holding down there. Let's look at some of the other big altcoin out here. Let's go on out to XRP. Decent week for XRP, aka Ripple, up about 4.5 cents there. So bouncing off that low 40s we've just been in for a while. It's kind of been locked in this low 40s and then up to 60 odd to 70 odd cent range on the upside, and seems to be vacillating within there week to week. A good headline, a bad headline. Of course, it also gets lifted by all the other big crypto and they tend to surge. Ripple tends to go with it a little bit, then it sells right back off again. But it's been a fascinating one to watch, and it's at about 44, almost 45 cents. Today, Bitcoin Cash up about 30, almost $31 from our last show. Bitcoin SV up about 3.25 points from our last show. Let's go out really quickly with a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, I already touched on our audience poll earlier in the show with Greg. I cheated and bumped that up to the top of the show. But you folks obviously are very optimistic about all things Bitcoin ETF. I do tend to think a Bitcoin ETF is kind of the missing ingredient to the stew here in the U.S. Once we get that approved, that will be a watershed moment. Then your literal grandmother from Iowa, she can obviously go out and buy the Bitcoin trusts. Now, all the issues we kind of just mentioned are still problems with those products for her and indeed for anyone out there who's trading these things. But a Bitcoin ETF, that would open up the doors to a lot of other things, including everyone who's always requesting in our poll, 22.2% said they just want Bitcoin options. That would be a backdoor way to get that, of course. And of course, once that started trading, it would probably have to rebalance in the spot or perhaps the futures, depending on how they structure it. So that would drive paper to all these other things. And that would, of course, maybe indeed grow the ecosystem of crypto derivatives here in the U.S. So that would certainly be a good thing. Doesn't seem like we're that close yet. I would love to agree with our audience and say you guys are right. We'll have something approved and launched by the end of the year. If we can emulate our neighbors to the north in Canada, maybe. But I'm kind of with Greg. I don't think we'll have it done and all of our ducks in the row by the end of the year. But that's one I would be happy to be wrong about. We also have a question coming in here from Barry. This is what I was just talking about earlier. He wants to know why I always give that standard caveat of why the market cap numbers are so unreliable. This goes back, Barry, and anyone else who has this question. I encourage you, go back to some of the very early episodes of the Crypto Rundown. We were talking even then. There were some interesting studies that were done about how these market caps are actually determined and about how much fluff there is, shall we say, in the numbers put out by these various venues, because at the end of the day, it kind of behooves them to say, hey, we have a large amount of assets trading over here. Come trade on venue X. And then venue Y does the same thing. And also the reporting is still not up to snuff in the crypto space. And so a lot of the things we've come to take advantage of and indeed take for granted in the mainstream financial marketplace in terms of reporting and oversight and everything else, not quite there yet in the crypto space. So it leaves a lot of room for, shall we say, inflation of these numbers, and you start compounding that across multiple venues, and the numbers start to get a little bit out of hand, which is why I say take those overall market cap numbers with a grain of salt. I will see if I can find, Barry and everyone else is interested, the links to some of those papers. I'm sure there's been some updates in the intervening years, but there was a lot of interesting discussion in the early days of this show about just exactly how inflated these numbers are and why those inflation practices occur. We'll see if we can find that for you, Barry. But it is indeed, at the end of the day, why we say take those market cap numbers with a very hefty grain of salt. All right, everybody, that's going to do it for this episode of the Crypto Rundown. I want to thank our guests for joining us in the crypto hot seat today, Mr. Greg King. Check him out over there at Osprey Funds on the old Twitters if you want to learn more about what's going on with their Bitcoin Trust. Right now, if you want to play in the trust game, there's them and Grayscale, and that's pretty much about it. And particularly if you want something you could trade in your IRA, and that's been an issue for a lot of you out there. So this trust does check that box if you are indeed so inclined. Just again, check out the price action, get a sense for how this thing is trading first. It's not quite one-to-one up and down with Bitcoins, other things going on out there. But if you want to learn more, Osprey Funds is the place to go. Sounds like Greg and his team have some more interesting stuff up their sleeve, so we'll have to check back in with them down the road. And of course, I want to thank all of you out there for downloading and streaming and subscribing, and thank our friends over there at Genesis Volatility, aka GVol, for supporting the program. Check them out, gvol.io. If you like this show, you're going to love that. Kick the tires and light the fires over there. And we'll see you guys throughout the rest of the week. Interview Tuesday, Education Wednesday. Check out that one, listeners, if you're listening to the Crypto Rundown. That will help explain a lot of these terms we use here all the time. Open interest, volatility, skew, all these things we take for granted here may be new to you. So Education Wednesday, the programming there, certainly worth your time. Thursday, we're back again with This Week in Futures options, as well as episode 2 of the Option Block Friday, Volatility Views, and it all kicks off again on Monday with another episode of the Crypto Rundown.
This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.